All right, I just wanted to do a quick video on Meta and why I am long. Let's try to make it short and simple. All right, Stock Unlock is the general website I'm using for metrics to track financials, uses discounted cash flow calculator and other things. So the way I like to use this is I try to make the fair value as close to price as possible by plugging in metrics. So looking at Meta, the market is currently only pricing in an operating cash flow growth of 12.3%. The average is way higher than that. I reduced the share buyback rate a little bit from the average. Left dividends as they are, and just a price ratio of 12.5. And the average is fairly higher than that. Normal discount rate, you get about the current price now. I think that is heavily underdoing it. So like a bearish case would be more like this. 19% compounded operating cash flow growth with a more reasonable multiple. Could be higher, could be lower. So fair value in this case is much higher. Who's to say that that's where we're going to be, but that's generally how I use the calculator. I don't always use it to project outward. I use it to project what the market is pricing the stock at on current prices. And then going into the stock, we're going to see a couple things that I like to look at. And this is where things get a little tricky. You can see huge average growth for these three metrics. Zooming in to more near term, we're going to focus on operating cash flow. The market focuses too much on earnings, and you can see that there was an earnings drop from a one-time expense. They're also spending a ton of money on research and development. So you'll see they're eating tons of their cash flow just from that. Add some stock-based compensation in there. That's a fair amount of money. But just easing it down, we're looking mostly at operating cash flow, which is a massive growth. It's accelerating a ton. And part of that is they can kind of cross-sell their customers to themselves. They have a massive gross margin. We can go down to operating margin. It's a little all over the place, but they spend so much money on growth that that's expected. This is really the most impressive thing. So they have over 3.5 billion people using at least one of their apps daily. So imagine how much ad exposure they can have as a company and how much money they can make from exposing that group of people to whatever ads they choose. Look at a couple of the other favorites. The management team's returning over 25% right now on their investments. And then looking at the chart, this is drawn on a monthly, going to the weekly, which is the setup I'm looking at. I use this as momentum, OBV, on balance volume. If this holds here, and we have this, I use BBWP for volatility. It's a huge pivot, obviously, from this huge volatility down. But generally, you'll notice volatility will get low, and then there'll be some sort of move. Volatility will be high, eventually will cool off. So this move obviously already happened. This move already happened. The question is, are we going to go lower or not? My vote is we don't go much lower than this on the monthly. I think maybe we would wick down to this moving average. You already did it before, but it was like a huge set of buyers stepping in to eat up that stock as it dipped below. So I highly doubt Meta is going much lower here. It easily could pop down into this range. But that's kind of a short synopsis as to why I'm long right now. Hopping back into the setup. Forward PE is 21. Which is just way too low for a company like of this value. So I think we're going to expand. And I believe we're going to see at least a couple points of multiple expansion here on the forward. The market does not like this CapEx spend, but here we are. I'm bullish.